What's up, guys? Just give me a sound check. And we'll get started. Hopefully everyone's doing well, making a lot of money. I mean, if we're this high up, hopefully you have something to show for it, right? Sound is good. Cool. We'll get started in a second. Give everyone a minute or two to settle in. If you're not subscribed to the channel, go ahead and hit the subscribe button, hit the like button, all of that. There's a... well, wait a second before I get started. I'll check the chat in a minute. I have a tendency to check the chat early and then lose my train of thought. So as long as it sounds good, which I see that it is, haven't had any sound issues in a long time. We'll get it going. Another minute. No all-time high today. No all-time high today. We have the we have something that in the past was a pretty significant catalyst, and that is what looks like another bank failure with New York Community Bank dropping 40% and halted. But doesn't look like there's much of a response by BTC. Anyway, all right, let's get started. We'll get right to it. As a reminder, none of this is financial advice. Right, strictly for entertainment purposes only. Please hit the like button, hit the subscribe button. I appreciate all that. I very infrequently hop on here. I always say I want to hop on here more, but life gets in the way, and now the market is just ripping, and it's tough to find time to do really anything outside of trading and then spending quality time with family, and then also attending, or rather tending to and attending the other things outside of the market, obviously, that I also enjoy. So you only have so much energy to give around, and streams consistently streams take a lot out of you. But there is a day, there has to be a day where I'm going to be doing this consistently, and we'll just continue to say that and never get around to it. But yeah, shout out to all of the shout out to all the people that do turn in, though, do turn out again, because I know that there's some people that stream very consistently, and I will post a stream link, and then I'll post it like a week in advance, which is never a good idea. A couple days in advance, and then, you know, as we get to that point, I'm like, ah, fuck, I didn't think of this. I have this scheduled. My wife wants to do this, and if you're married, if you have kids, you know how it is. Anyhow, let's get right into it. Really quickly, I repopulated this. The Linktree is in my profile bio on Twitter. There are a bunch of new bonuses that have been added. So whether, you know, you have your pick of the litter, I'm not going to tell you where to trade. You only have so many options depending on where you are. But this is a good assortment of exchanges, you know, between Phemex with some bonuses. I think Phemex is still non-KYC. Woo is awesome, so I do a good amount of trading on Woo. Bybit, obviously, a very popular exchange and very significant exchange in this space. Synquote, which I am part of. So Synquote is the #1 options DEX, and we're going to be listing perps hopefully within this week, and then we have a lot more that we're going to be listing that I can't really get into. But if you see that you have points, I think you could begin to extrapolate from there what is going to be coming. And then something that there is some curiosity whenever I post anything like this. I'll post this platform, right? So I'm posting that platform, or I'll post the level 2, which is the you know, the bids and asks for stocks. A lot of you guys have asked where I trade, and this is an organic shill. I've actually traded on Centerpoint as far as my stock brokerage and the Dash Trader platform that they have. I've been on Centerpoint, which is part of Clear Street, for a long time now. And they saw that I was sharing the platform, and it's not like I was affiliated with them by any means. And they reached out to me and they said, hey, can we do something for your followers? I don't get any commissions for this, so if you guys take advantage of this, good for you. None of it goes to my pocket. They end up just giving me a kickback that takes off from my trading fees and my commissions. But I've had a lot of people ask me. I know there's a good amount of crossover now. People trading the ETF. There's plenty of people that trade crypto-related stocks, miners. A lot of the AI things taking place in legacy markets or in the stock market. And so for those of you that are interested, like, take advantage of things like this. You know, being able to trade without commissions, having free access to the DAS platform, so the platform that I use. That's like, I think that's like $200 a month, and then they're also giving away a 1-year TradingView subscription. There is an account minimum that's lower than it normally is. Normally, if you're trading on some of these better platforms, I'm not talking like trading on like TD or like a Robinhood or a Schwab. We're talking about a platform that has better execution, has better access to short borrow, and it's just better trading for people that are trading, that are day trading stocks. And it also has, it's got a really nice setup for trading options as well. But this is now in that Linktree. You'll see me share this from time to time. Take advantage of it. It's a good deal. And again, this is not something where it's a ref link and I'm getting any kind of kickback based on your trading. It's none of that. They just wanted to reach out and do something for my followers. Obviously, they know that I have a significant amount of followers, so they benefit from that also. Okay, so all the links are below. There's new bonuses in that link on my Twitter. And now that we got the shilling aside, let's get into it. The sound is weird. Someone says the sound is weird. Can anyone else back that up? I find that sometimes people say something's wrong with the sound, and it's really just what they're listening through on. All right, so let's zoom in a little bit because I have this zoomed out for my relative performance chart. Okay, so I guess we'll just get right into it. I'm gonna, because this is, you know, because I infrequently hop on here, I want you guys to take advantage of the opportunity to ask me questions and not just, hey, what do you think of this, you know, obscure ticker? All right, so I turn the music down in the background. Let me turn down the gain a little bit. That might be it. Or maybe it's touching something. Who knows? Either way, if it's good for most people, it's good for me. But the opportunity to ask questions. I've been around here for a few cycles. I've been trading now for over a decade. I had traded equities for a long time, traded futures, traded crude oil, traded commodities, came to crypto and started trading crypto full time 2016. So I've seen enough here to where I think I have a good amount of experience where we're headed, which is in, I don't want to use the term price discovery because it's all price discovery, but talking about through all-time highs. Once you're through all-time highs, it's like you don't have the luxury of looking at prior levels and areas of importance based on volume, based on structure, and you're just kind of sailing in open sea. And this becomes, for people that are just holding and not trading actively and not trying to time every market turn and gyration, this is a time when it could be slightly difficult, right? Because there is nothing to look forward to. It's not like when you're, you know, it's not like as clear as it became when, for example, we started trading back within this prior range, right? So trading back within the prior range, the level I kept saying was like 31 or 30,500. Was making it very clear, though, that it's okay. So we're trading back within this range. The levels that we have to look forward to, while it might take time for the market to move there, it's a high probability that based on all of the setups we're seeing across the market that we're going to move from point A to point B. So you have an idea of, okay, where can I define risk? Where can I begin to take some off? And you're just clearly defining things based on market structure and based on these contextual shifts. And I mean contextual shift because, hey, this level did its job in the past for this bounce going back to 2021, did its job on the way back down, did its job on the reversal and attempt to reclaim, did its job earlier in 2023. So the level is clearly working, right? So reclaiming it, retaking that level, being rebid, that's very significant. And we have levels in advance to look forward to. Okay, so significant round numbers, meaningful levels where previous volume was, there's a significant amount of volume transacted, whether you're looking at a profile, whether you're looking at market structure on a high time frame chart, whether you're just looking at a large range and saying, okay, the midpoint is likely to be sticky. The point is you have something to look forward to. Whereas now heading through all-time highs, you can't rely on that, right? A lot of the times people will look at significant round numbers, right? Sort of shelling points, areas that people are agreeing upon, longer term moving averages. I think that VWAPs are very useful. So VWAPs on the weekly, on the monthly, anchored VWAPs especially. So those are naturally anchored to, again, a point based on the calendar, but anchored VWAP meaning a VWAP that is placed at the origin of a level where a significant change occurred. So whether that's a VWAP after the all-time high break, whether it's a VWAP at a swing failure, whether it's a VWAP that is placed on a move that originated from a news catalyst, sovereign bank, sovereign wealth fund XYZ buys Bitcoin, Bitcoin jumps up 10K. I'm putting a VWAP on the origin of that move, right? Just to see where the risk is tagged on, where it's averaged out, what level you want to see hold, bulls control above, bears in control below, or at least bulls starting to get in trouble when below, if you just think of it from a positioning standpoint. So we broke the all-time high yesterday. Pretty anticlimactic for sure. Prior break of all-time high, before it might not be noticeable on a high time frame chart, and it is, but it was for the most part up only. But prior all-time high break right before that, we spent actually a month hanging out below it. Now, there was a month of hanging out below with like a 13 or 15% correction and overall positive drift. So if we just zoom into that area, there was a just general trend of price moving higher. So even though we're kind of hanging out below the all-time high, we're kind of consolidating against it. As soon as you saw this low, you have a low to focus on for defining either a further position or an invalidation. And it was clear by this second turn that, okay, we're forming a higher low. We're favoring this level. The drift of death is what you would call it if you're shorting, like never short some kind of structure like this. If it's not doing its job right away with sellers showing up and continuing to kick this thing lower, then it's clear that you're just setting up for a much larger move through the level. So we're sitting kind of in a similar position, but we actually broke the all-time high without any kind of longer term correction. And I don't mean correction, I just mean consolidation below it. So we broke it, we're above it, whether you're looking at it from a weekly close standpoint, but you got 4 days left. We are above it. We wicked above it, but we're now just hanging out there. Listen, is this thing going to break up during the Asian session and then rip up plus 70? I don't know, maybe. Can it spend the next 4 weeks above 55K, 60K? I don't know, maybe. But honestly, I think that if there's one thing that I'm really confident about, it's that it's not going to be a case of us having some kind of triple top. I say triple top if you just consider going back all the way to February, April 2021 move, all the way up to November. So it's more than likely, it's on balance probabilities, very, it's all, I would say it's a foregone conclusion for the most part, right? It's all as certain as you can get in, obviously, markets dealing with a ton of uncertainty, right? That this is going to continue to move higher and that this is not the top. So it's just a matter of when, right? It's a matter of when. It makes sense that things get really hot towards this level, right? You're going to see a bunch of different decisions being made by people that are that's not the best way to put it. You're going to see activity occur that you would expect, right? So the market's been up only now for over a year, right? This is the most significant level on the chart. It's reasonable, actually, for people to de-risk. It's reasonable for them to hedge. And I say this, if anyone remembers, like a month ago, I said and I wasn't the only person who said that. This is a guy named Citrini. He's a FinTwit guy. He also trades crypto. He's a brilliant follow. Citrini 7 or something. I know a lot of time I say things on here and I never actually. So just in case I say I'm going to share this later and I forget to. So this guy right here was talking about, okay, so the S&P was at the time, it was approaching all-time highs. It's like, listen, it's the same concept with BTC. It's completely reasonable to be defensive below and just be balls to the wall bulls, balls to the wall, risk on, bull-tard above, right? This is such an obvious level. It's a really clear level to define to the point where you could say, and again, reasonably, as long as we're below it, I'm just going to kind of pull off. I'm going to hedge. I'm going to, take some risk off. And we're right there. We're knocking on it. We're at the threshold of the door. If we're above it, I'm just going to get back in, right? If we are able to hold that level and the market is able to confirm above that for a day or two, I think it's it's off to the races, right? Much higher at least before we have, we're just going to continue to have corrections like that. It is what it is, and expect them to get violent. But I think that's reasonable. So for anyone who's at this level and taking profit, I mean, from a high time frame standpoint, it would be the area where you would expect profit taking for people that are not willing to just wing it after all this time, right? After they've been able to bag this kind of return across the market. Because anything Bitcoin does is it's going to exacerbate anything that's occurring in the alt market. Its potential is also for Bitcoin to break through the all-time high and then hurt any alts that haven't been outperforming to begin with. So you'll see a bunch of alts that are going to be performing negatively against BTC. The really strong ones will probably outperform it, higher beta, and consistently maintain that relationship. But then also, if let's say we do pull back further to, we retest 60, although we did get that 60 swipe yesterday, alts will probably respond to that negatively, but then you'll see really strong moves in them. So I just think it's, for anyone who's taking a little bit off up here, I get it. I personally am staying in position, haven't changed anything, been trading a lot around it. But like I said earlier, I've kind of tried to indicate my level of confidence in it breaking eventually. So it's either heads we win, tails we win also, in the sense that break the all-time high, a high time frame close above anything. Literally, if we're just gonna kind of draw it out in simple terms possible, major rejection here, but it's not even. This wasn't like catastrophic by any means. I was actually surprised that when we broke this level, and you could even look at it just across major exchanges, just going down to just low time frame charts, because when I was monitoring the break, I was looking at it on like a 15-second chart. Nothing, no blowouts or anything. This was basically like the market was going up here somewhat on fumes, right? There's a good amount of derivative positioning, and it just wasn't forced. And it's almost like I would expect that the fireworks are being saved and they're allowing a little bit of indecision to build up, allow a little bit more positioning to build up before kind of, just absolutely sending this thing through the level. But this is not what you expect from something that is absolutely, topping out either. You would expect spreads to blow out. This thing should have, and when it does, when you actually do get the break of an all-time high that is the sort of confirming break leading to expansion, price is going to, tag 71, blink down to 65, maybe not this extreme, but the book is going to clear out, right? The moves are going to be all over the place. You're going to see it settle briefly. And then honestly, what I just want to see is, I just want to see us literally just hold this level, just remain bid, right? I mean, if you're looking at something like an order book, if you're looking at Delta, when we break this level, you want to see things firm up on the bid side, and any selling just get immediately absorbed, and this thing continue to walk higher. And then I think it's, I think it's on. If we, that's heads we win. Tails we win also is literally if Bitcoin just does something like, this trades within this range, and then has this consolidation that people will second guess it. But if the longer it does this, the more likely a move is to be much. At that point, I would expect a more violent move. You're building up. Anytime you're in an area where prices, there's two-way trade, and you have it moving sideways for a long period of time, as long as you're seeing any kind of level of open interest increase or stay the same, there's positioning building up, and someone's going to be wrong, right? And in this case, because I think we're so confident of this moving higher, anyone who gets involved here and sells passively, or whether they're hedging, they're going to be wrong pretty quickly, and they're probably going to chase this thing further up. So listen, the benefit of also trading back down to this level and doing all that is that if we did this for, let's say we did it similarly to the first time, this market has a tendency to just repeat exactly what it's done in the past, almost to the T. If we did this and we're trading like this for, let's say, another week or two, strong alts are just going to fly. That is the amount of wealth that was created by BTC moving up, and then the amount of money that has gone into meme coins. Like if we just look at the volume by meme coins of like the top 5 meme coins, it's above like 90% of the market. And this is probably just going to show, let's see, the spot volumes. Where's memes? And it's going to be, it's not at the top in terms of volume, but the other day it was absolutely, I mean, the derivatives are not listed right here. But all of this capital that is pumping meme coins, I would say it's pretty degenerate capital. This is not capital that's conservative that's going to just leave the market. So all of the capital that was created, all of the wealth that was created, similar to BTC, is going to find its way into other areas of the market. And we're at the all-time high with that. And there's a lot more fuel for this market to continue to just have either incredible pockets of outperformance, right, and being able to play these rotations, or just break through all-time high and you start to see everything mark up, which I would expect. So, I mean, I guess it's important to talk about downside levels just in case. But we've already done what I talked about this yesterday, and I ended up shorting right after the WIF listing, because I figure if a good amount of air comes out of WIF, we might see some air come out of the rest of the market too. And so something I was expecting with things like Injective and Celestia a couple weeks ago, that, all right, so these are worth monitoring, because if a lot of profit is taken out of these, that could affect the broad sort of confidence of the market. But the reason I mentioned 60K going, right, when we were at 65, was that it's just the most obvious level for the market to sweep, right? There wasn't a whole lot that stood in the way. Again, this was kind of a lackluster move above the all-time high. There wasn't a lot that stood in the way on the way up. This was kind of like a very melty move up, not on a ton of volume. It was spot led, but the move that we got through it was just, as I said, very anticlimactic. Trading back within this level, trading back within that structure, it's kind of all but guaranteed that you are going to not find much resistance on the way down. And anytime we see something like this, where you have this brief consolidation of, a week or two, and then you have a rejection only slightly higher, like a long consolidation like this, someone's going to be wrong, right? So a break through either side is going to lead to a pretty decent one-for-one move. But for this to kind of die out right above rather than lead to expansion, it's very unlikely that the top side of the structure is a good area to get involved, right, on the long side of things. So meaning on the way down, if you were one of the people looking at this, it was reasonable to look at this and say, okay, next support level would be the last resistance level. But it's just more than likely that because of all that fresh positioning and sort of these uninterrupted lows on the way up, just clean market structure, that you would get something that swipes. So it almost always pays to get involved at the next gap below. And that meant trading back down to February's VWAP and just taking out all of that structure. And you had that very significant liquidation cascade. And if you needed any reason to get involved besides that, right, so retagging 60, this was a massive open interest wipe. Right, so looking at two forms of open interest, you have Bitcoin up here, and then you have global OI. So global OI was at 47 billion and wiped all the way down to 38. So just under 10 billion liquidated. All right. So you don't have to be, so based on that, you don't have to be bullish even anymore. Like you could have still maintained a bearish bias. Like the best way to put this is, if you were someone that thinks this was topping, you would have still had all of the reasons in the world to long this dip across the board. Right. That's why I said when WIF was at like 115 or whatever, it was all the way down here, and I said WIF is going to bounce really hard. Well, one, you should have known that because WIF had been outperforming and is just on fire. But two, after something like this with a bunch of positioning occurs and we have a major liquidation cascade, the best way I could put it is, if you look at the order book, right, and if let's say we'll just talk about Bitcoin in this case. As price is crashing down, right, as we're seeing all those liquidations come through, the book doesn't have a chance to fill back up above. So what happens is you see a ton of positioning taken out of the market. Let me move this away again. A ton of positioning taken out of the market, and the ask side doesn't have a chance to really replenish. And after, you'd have to imagine that if you are a market maker, if you are just someone who's interested in selling, you see things like this, which is over a 10% move, right? This was almost 15%. You see how much open interest is wiped, which is 25% of the market. You have to start questioning whether or not it makes sense to provide passive liquidity on the way down to fill an ask to what? Get to see a further drop? No, you know that things like this often are followed with a move that fills out this inefficiency, because this is basically a gap. It leaves a vacuum in the book, and it doesn't take a whole lot to fill it. So that's what Dalai Lamas are, right? For the most part, they're like effortless refills of gaps that are created in order books. And more importantly, everyone knows about them, so it becomes a very self-fulfilling process. So you don't even have to be bullish to get really long when something like that happens after we've had this kind of trend. But, you know, more than that, like that's what you want to see for healthy trends either way. So we want to see that on the way up, as open interest is building, that we do see these wipes, and things they are getting hot, right? So for example, if we look at this is over the last month, these are large caps, but just my list right here, things got really hot. Okay, this 100% annualized almost across the board with alts, right? If we go to memes, for example, for sure, this was Bonk was 252, 167, PEPE 200. So that is that's annualized, right? When annualized is not something that is realistic for most people to think of because they're not holding perps for over a year, but it does have a way of communicating how hot things get, although it would only stay that way if all things remain constant, which they don't. So we saw a good amount of overheating taking place, and it just makes sense because the market's really bullish. Everyone wants to be on the long side. Everyone wants to gain access to leverage, and you just have to think about why is the leverage, the funding going up? Just think about it in terms of supply and demand. More people want access to it, the cost of it's going to go up. And you know, if you don't understand what the funding mechanism is, I suggest you read into it because it's obviously way more than that. You know, it's a matter of keeping markets aligned and incentivizing people to take the other side and arb that and get paid that funding. So you have a two-way market. But this overheated. It's briefly cooled down after that pullback, but I would just say like expect it to overheat again right through the all-time high. So a lot of alts were averaged around 100 annualized. So meaning if you held that position for a year, you could liquidate yourself by holding a position long enough, right? Under collateralized, over collateralized, whatever. 100% annualized for that. It's not realistic to think in those terms, but there's a ton of decay in that position. It matters when the market isn't moving up though, right? Because if you're trading alts, if I'm trading Bitcoin and let's say, for example, it's really bullish and funding is 10 basis points. So think of it as 10% of 1%. If that occurs every 8 hours and I'm paying that, that's not a big deal if the market is moving up, you know, an average of 4% a day, right? So if we looked at 30-day implied vols, if we looked at just looking at the options market, the implied move per day is like 3.5%, 4%. That's obviously not something you could just say is guaranteed. But the point is, like, if you're looking at alts, especially, you know, things that are moving in trend or strong, if the funding is even 1%, it's not going to matter if the alt is moving up 10% a day, right? It matters when this continues and the market is not moving up anymore. And then you have, if you look at open interest, you could begin to calculate how much funding is being paid to take the other side of the trade, which becomes very compelling, obviously. And it becomes really expensive to keep that market that high. But that's, again, if things stop moving. If you see funding going up when things are ranging, the same way that I've used this as a signal in the past and talked about quarterlies as well doing that, then it's a bad sign. Market moving up is fine. And it's a matter of length, right? If the market consolidates for a week, that's different than if it consolidates much longer, right? And you start to, you know, there's a little bit more, there's obviously, it's more serious over longer periods of time. But another point is that, you know, if let's say we say this, you know, on average, these are over 100% annualized. And what that looks like non-annualized is you're looking at funding rates that are very high, right? They're 10%, not 10%. They are every 8 hour interval. They're, you know, 9 basis points, 10 basis points, 11, you know, they're significantly high when you think of baseline being 1 basis point, sub a basis point, or negative during periods of the market just trading both ways and there not being this much, this strong of a trend, or this much demand on the long side. If you consider that that's the average right now, well, through the all-time high, and this is why you can't just reflexively fade high funding. There needs to be more to it. There's more nuance. through the all-time high, expected to be 200 to 300%. So last bull market funding rates for alts across the board annualized were in excess of 250, 300%. And the market shrugged that off. There were large corrections, right? But it didn't turn the trend. So it's worth paying attention to, but it's definitely not something that, and you have to understand what's behind it and when it actually matters, right? So we had a little bit of a reset, but I just would expect that we're so close to the all-time high that when we do finally get that break, that we see things really begin to pick up again. But the point is, after yesterday's wipe, you had a ton of reasons to get involved in that dip because that dip was a gift. Initially, that dip is a gift. It doesn't mean, though, like I said, it was a matter of filling out that inefficiency. It doesn't mean, though, that this thing just, continues to rip up from here. I'm prepared for this to move sideways a little bit longer. But, wouldn't be surprised at all if we, make a new all-time high. And I wouldn't be surprised if we made one in the next hour, right? So just not saying that that's happening, but just to kind of give you an idea of, not anchoring to any expectations. So as far as alts, I think there's a good chance that actually meme coins, people are already starting to talk about rotation. I would assume that any trend that's intact is going to remain intact unless it's clearly changing. So things like WIF that again, a spot market on Binance gave an awesome opportunity. So people never understand this. When I post, I say the market's going to put in a temporary top here on the Binance listings. Binance is 100% hit rate in being a temporary top for alts listed in the spot market that are really hot. So obviously right now is the best opportunity. So WIF has already done away with that drop, but PEPE during months back topped. The idea is like there's so many diamond-handed people that are holding these for so long, and they're so bullish. They're up multiples. The Binance spot market is the opportunity for the deepest amount of liquidity to be accessed by a majority of them. So it makes sense for people to take profit into that. Now in a raging bull market, it makes sense for that to be temporary, right? But as far as like just what I'm looking at, I think that, and I got a lot of shit for saying a month ago that if you're, and this, people reshared this tweet, but they took it out of the other tweets it was part of, it was following up. I said crypto needed a new narrative as a larger narrative, right? Because there's just a lot of bullshit here, right? We have a ton of awesome ways to speculate, but as far as being taken seriously, it needs a new narrative, all right? That's as far as being taken seriously. So clearly meme coins don't fall under that category. It's more like the casinoification of everything, or I don't even know how I would say that. Everything has become a casino in a sense. But I talked about buying WIF, right, down sub 30 cents. So I was long WIF after saying that, and I was very transparent about that. But I do think that a lot of people are immediately starting to call for the rotation when it's not clear yet that WIF has done anything, that PEPE has done anything to say that it's over. If anything, you would expect that the things that are the strongest are going to continue. So unless that changes, right, unless we start trading back below significant levels, and it looks like, WIF is just starting to break up again, and PEPE the same, breaking all-time high by BTC, I just expect these to continue to be strong, right? So PEPE very strong. Are they going to have large pullbacks? Yeah, but I don't want to rotate completely away from these from an attention standpoint, at least. Like I'm trying to time these trade-wise, but from an attention standpoint, I don't want to, forget about these because I think the pullbacks we have are going to be worth deploying in here still until it becomes clear that there's just weakness, right? And weakness meaning like when you have a case like Bitcoin dipping, are they becoming slower and slower out of the gate? So, for example, when Bitcoin dipped this morning, needless to say, who was the fastest one off of the lows? And it was actually WIF off of the lows, and it was Myro. Where's that dip? Oh, it's back here. It was WIF, and it was Myro at the time. When that changes, then there's reason for concern, right? When PEPE stops responding off of dips and you're having BTC outperform it, when it starts losing key levels in market structure, right, on the daily, which means like it could mean yesterday's lows, that's when you would expect maybe things to cool off. But the best way I could put it is like breaking all-time high is probably the one thing that's going to get a lot of new retail in here. because right now it is still very much like there's new retail, they're coming back, but it's not front and center yet. I think the all-time high is the thing that provokes that, like all that interest again. If you go onto your Coinbase app, if you go onto, your whatever it is you're trading and trading your fiat into crypto from, which for a lot of people is Coinbase, the immediate thing you see in that screen, because there's only so much space on your phone, right? Most people are using their phone. The first thing you see are the meme coins, right? And that'll change over time, but as long as that stays the same, if someone's brand new to this market and they see that things that are listed once they log into their account, up 80%, up 30%, up 120%, they don't have the same thought process that people do here that have been trading for a long time, that even they don't even know what resistance is. They don't even know to think like, okay, it's doubled in the last day, let me take a little bit off there, maybe look for a small dip, or it's extended. They don't think anything in those, and maybe for the better, because they don't psych themselves out of positions, but they just buy indiscriminately, right? So as long as that stays that way, which I think it's still that way, it doesn't make sense to bet against these. I think another thing to focus on, so meme coins, PEPE, Bonk. So I've obviously changed my tune. Momentum is there. There's no reason not to. And then we have an AI. We have the NVIDIA conference coming up in 2 weeks. And as expected, what is performing exceptionally well right now? AI. So we have Fetch that's obviously broken through all-time highs and doubled since then. So I've been sharing Fetch and Render for a long time now. So these have been awesome plays for me. Render has just broken all-time highs. So Render's been following FET. Okay, it's clearly following, so it's not as strong, but that relationship is pretty tight, and tight enough that it's outperforming everything else. And it's an area now you could very cleanly define. So above this all-time high, above 7, above this sort of 7 to 8 region, you're good. And you have this 2 weeks out from an AI conference when the market is looking for any reason to bid and to get excited. So this is a really, this narrative is going to be sticky, because it's really, we're seeing how the world is changing in real time from AI and all the developments that are being made, it's seemingly at an accelerating pace. So Render, FET, Tau, I'm still, so BitTensor, unable to get much of a bag of this. It's very thin. It's not many spot exchanges. Actually, Femex just listed it. So Femex, I have the links in my description. They actually just listed Tau. The trouble is, not gonna sugarcoat this. On every exchange, it's really thin, like crazy thin. Like if you're trying to put on any size, you're gonna have to do it over a couple days. We're talking like 2% depth is like, depending on where you are, $10,000 to $50,000, which for most people I understand wouldn't even matter. But the point is, like, it's thin, right? So it's a very popular coin. It's a very significant. It's a large project, but there's not a whole lot of trading volume in the spot market. So I don't know if the price is necessarily reflects its fair value yet, as silly as that sounds. But I will say that one thing they have going for them is that they are smart enough to acknowledge that, and acknowledge it sort of as an edge, that they have the same supply as Bitcoin. So if you look at this, what does retail favor? They favor things with low units. This is scary because it's $724 a coin. But if you've been here long enough and you know that that doesn't mean a whole lot when your supply is 21 million, even if it's not necessarily something that leads to the same outcome, it's possible to get creative and think, okay, so maybe this thing can get close to Bitcoin, or at least pulling a double wouldn't be that significant because there's barely any supply. So that is something that is worth keeping an eye on. Ocean, another AI play that has tended to follow in the footsteps of Render and FET. So again, mentioning these because the AI conference is 2 weeks away, and I think that if you have anything like this, to be fair, so we're looking at the 1 week chart of Ocean, and this has been my setup, guys, for this entire last few months. This chart setup, not going below really. I mean, I'll once in a while to monitor, I'll go below I'll go below like the 30-minute, but I'm looking at, for the most part, 1 week, daily, 4 hour, 1 hour, interchanging those, and staying somewhat zoomed out. It's easy to shake yourself out if you're not zoomed out in trends like this. But to be honest, I think setups like this, so compelling narrative, a lot of strength, likely to continue. It's reasonable to just look at prior all-time highs as a target. You know, okay, I'm gonna keep this on until we get back to all-time highs before I start to peel some off and rotate. I think this is so Ocean, for example. I just think that's where it's headed. It's been following everything else, and those are gonna go higher. And I'm confident in alts going higher, strong alts going higher, because we do have, again, a lot of capital is created, a lot of wealth is created, and it's not going to just leave the market. Another one to focus on is, I think roll-ups will be worth keeping an eye on. So there is a combination of that tech and a new coin, which, as I've said many times before, I think it's always worth keeping an eye on really new projects. So if they show signs of strength early, I mean, if anyone's remembers Celestia, I shared it at like $2, or I think I shared Celestia. I literally shared it at the lows. It was in the $2 range. It was brand new. It didn't do anything besides go up only. And there is something to be said for people feeling like they're getting involved in something that doesn't have any bag holders, doesn't have any ugly price history. You know, if you're an XRP holder, you know, you could easily look back at how bad this has performed over time, and it's kind of ominous in that sense, right? You know, you're looking at the prior all-time high that is pretty far away. I mean, we haven't really done much. There's a lot of price history. There's a lot of scarring on this chart. And as silly as that sounds, it has an effect when you look at a chart and it's a new bull market and you think, you know, endless possibilities, right? This thing can go up only. I mean, look, it's just broken out of this. You get the idea, right? That's the narrative. That's sort of the language that I'm thinking. That's not the exact thesis for me getting involved, but a lot of it does boil down to that kind of, I guess, perception of the perception of other people, right? So this is another one, right? Recently positioned in this. Starting to flag up, broke out of this range. It doesn't make sense to, I think, not have some kind of exposure to this. I'm not talking for everyone else, obviously talking for myself, because of what we've seen in the past with things that they've moved sideways for a long period of time. They're new and they haven't just began to roll over. So otherwise, like anything that's new and, you know, is rolling, like Jupiter, for example, things like this are actually easy to play, but you're waiting for that signal. And the first signal was, for me, was this break, right? So it's a pattern of descent, right? Making lower lows and lower highs. It's beginning to base out, and then a lot of times I'll just use a diagonal for this. And then just going by prior market structure, it's really easy to play breakouts and also to avoid it, right? If you're not retaking levels over, you know, moved sideways for a month, if you're not retaking levels, like why get long until you do? If it's clean enough, why not just be willing to buy higher with that certainty? So some obviously doing much better in that regard right from the start, and I think just this is one of them. Sin is finally looking good. I think I think a lot of pairs came around during the bear, and they got a beating, right? Everything did. I think this has gone through its washout period. The one thing about Synapse, and I share it, and I get this in the responses sometimes too, there seems to be this idea that this is owned by a lot of popular traders in the market, and therefore it gets traded. So the idea of strong hands was doubted, right? There's a few people that are really bullish on it, always have been, but there's always the feeling that they were trading in and out of size, and it never was really given a chance to breathe. I think that is, you know, listen, the one thing that I've said numerous times, or one of the things I've repeated numerous times, is some of the simplest trades in this market have literally just been this: break above after a long period below, and accumulation or correction or consolidation, a reclaim of the opening prices. So in this case, open, highest close, reclaiming that highest close. You know, it's a way of, as I've said before, saying to everyone who sold ever that they sold too early. And then you just get the idea of, you know, into dead space, and there's this thing has, you know, nothing ahead to really act as resistance besides, you know, round numbers and you know, what you see in flow. Let's see, where are we at right now off the lows with the bounce? Let's just see today actually as a whole. So near FET, Let me zoom out a little bit. Wait one sec. There we go. So Miro is still in the lead off the. So here's the drop. Let's see what we got off the drop this morning. So WIF, Miro, FET, render. So it's memes and AI. Syn, memes, PEPE, Floki, AI, Ocean. And this chart is easy to set up, guys. Someone asked me this morning. If you go on Velo, they have a version of this where they'll sort it. You know, you could make your own lists, but they obviously have these preloaded ones. So memes, Dino, and this is good, right? Because you could, you have this look back period already, 1 hour, 4 hour. This doesn't help me though for what again, the idea of like VWAPs also. I like to look at them from a point where a significant change occurred, whether that's a low put in, a breakout. The same thing occurs for rel. The same thing for me. I have the same thought process behind relative performance charts as well. Like off of the low this morning, I want to know who jumped the fastest, and continue to bet on those until that really changes. And then keep in mind how these changes are occurring over time. Like if you start to see that, as we progress, certain things are finding their way to the top of the stack off of the lows, and your memes are beginning to fall behind. Well, then it's a clear sign that strength is waning. But this is an easy thing to set up, by the way. So any TradingView watch list you have, all you do is, I use a fresh chart, so I just go to new layout, clear all the indicators, set it to a line chart, and I make sure I set the default line chart to so I save the line chart with the thinnest line. So I don't want these chunky ass lines. So instead I say, for example, DYDX, it's already added. So here, go into one of them. I save my default with the thinnest line, just so it's got this really tight look, clean look. Doesn't get messy with, thicker lines. And then I go through my watch list and just add these to compare. Add to compare, add to compare, add to compare all throughout the whole watch list, whatever you want to add. Make sure it's set to percent. And then again, let's say you are, Bitcoin drops 10% right away. When Bitcoin begins to recover, I'm anchoring this at the margin from that recovery point and seeing what alts are doing the best. What are moving the fastest. Let me just look through the chat real quick. See if there's anything I wanted to. So I feel like I've touched on a bunch of stuff. So AI and meme coins, expecting those to continue to be strong. Let's see, one sec. There we go. Get this above my head. Okay. A little bit of feedback from the mic. I'm wondering if some people don't hear it and some people do. I don't know what it is, but I know that when I listen to it on anything from my end, I never hear it. Worst case scenario with Bitcoin retracement would be worst case scenario would be retesting like 50, I think. Retesting that 50 region, having that deep of a pullback after an all-time high new all-time high. So I'm hoping that we consolidate in the better part of this region. So honestly, like, I would probably get defensive if we start losing 60. So this is my sort of line in the sand, because I don't want to give back really anything. And because, again, like, just remember, like, I'm not really missing out if I'm wrong, right? So if we consolidate here, I'm cool, because I think alts fly, and I think we're still going to end up above here. So if we end up breaking below 60 and we're having trouble here, or even if we're just hanging out low and there's no signs of bid, I could pull some off and begin to hedge, because I'm not upset about getting involved when things get better, because it's so close. because high probability setup exists so close that I don't feel like I'm missing out. Like, let's say I lose some in that positioning change down here, or by, hedging on a break of this level and waiting for things to cool off. If we end up moving lower and then we have some development, some forms of, higher lows and constructive price action, then yeah, I would redeploy. But I think there's really good levels to define a position around. I don't want to give much back, so I think 60 is a good level for me to keep an eye on. Right, we shouldn't drop much lower. There should be a continued pace to this. Any large corrections after this, I would be a little bit suspicious going into the halving. But yeah, I think I'm most focused on 60. It doesn't mean I would be macro bearish if we lost 60. My point is, I wouldn't be willing to just let everything continue to be held. I wouldn't just hold everything and kind of weather that. What I would say is, like, if you're in alts and we're above 60 and you see a lot of things moving right now, and there's definitely pockets of outperformance, and it is kind of a picker's market unless you were in memes. Be patient, because breaking the all-time high, you're just going to see everything get bid up. And the trouble in bull markets is feeling like you missed out by spending too much time on Twitter, seeing people making money, which you just have to be used to that, and feeling like you have to chase where they are rather than staying in your positions. If all things go as expected, which they look like they're going to, Bitcoin breaking the all-time high, everything's going to catch its rotation. Now, it might be, you have to consider, like, tying up capital in certain areas might be disadvantageous, and there's an opportunity cost to that, but I would just be patient, right? Especially if you have good positioning that's in profit and you're well away from your entries. I was listening in on Spaces, and there was a guy asking questions. I forgot who he was talking to, and he was definitely a top buyer, because he was like, "Hey man, do you think we're going to be higher? Like, are we going to break the all-time high?" And I'm just listening to this. I'm like, this guy just bought the top. He's all worried now because he bought the top, and I think buying through is a great trade. But listen, you have to understand what to expect if you're buying literally right at the most significant level in the chart. Is it possible to get a flush on, before Friday? Yeah, what'd you buy? If you, for example, what's Friday is the 8th. Probably going to be paying a lot of theta. So if you just look at, what strike. $65 strike, theta's 431. Yeah, there's not a whole lot of time. The market has to move a lot for you to get paid. I chart what I have, as you can see, like, I have Bitcoin, Coinbase, Bitcoin, Binance Spot, and then Binance Perps. So I'm charting the most liquid pairs. You don't have to worry too much. Just chart something that's liquid, so you don't have any kind of weird gaps in the chart, and you don't get any poor feedback in terms of volume. Yeah, funding cooled off a bit. I don't have any thoughts on NMT. I've only recently it was brought to my attention. Arthur posted something about it. It's a Binance Smart Chain coin, so it's not really that accessible. Yeah, it's strong, but it's also probably very thin. Yeah, look at the depth across markets. 2% move. All you have to do is buy $1,200 worth. So this is very thin. 24-hour trading volume is 2 million. Like, this is a absolute, pink slip, penny stock shitcoin. It's not surprising that it moves, because everything's moving, and this is an AI play, and I just expect it to be volatile. Yeah, I would actually prefer Bahamas, us to consolidate here. The more we kind of trade similar to prior cycle, the more content I think I would be, because, you know, all right, we're building a base rather than just continue to launch higher. You want to see the market build a base, right? You want to see two-way trades, that two-way trade still exists. And then it's not a market that everyone is just trying to get as long as possible and it's just continue to mark up. So I'd rather see us consolidate for, let's say, even 2 more weeks here and do what we did in last cycle, going back to December 2020, November, December 2020. Let's see, Celestia. I think Celestia is going to continue to be an outperformer, but you know, this did better than everyone else early and now is further into its correction and hasn't really shown a ton of responsiveness. I think this is going to be a good longer term play, but there's also, I think there are, let's just double check. I think there might be some supply coming into the market. Next unlock. No, it's actually pretty far away. I mean, 17% of supply in October. That's a pretty, I mean, we have a good amount of runway before then, but yeah, no, I don't expect this to underperform. I think it's just, it outperformed for a long time. You expect some kind of larger correction after, you know, after this kind of outperformance from the lows. This thing just up only, and it was a liquid up only too. But the market has been preoccupied with meme coins, and this is like when I said just recently about how it is kind of a picker's market. You wouldn't know that because of all the people sharing meme coins and AI, but every other sector is not like, it's not player versus everyone right now. It's still PvP to some degree, but with just more money. And ETF has definitely helped a lot, but there are pockets of outperformance. There's a lot of dispersion, and things are the best way. Just understand it, like, things that were strong are now suffering because other things are strong, and it's not a case of a purely rising tide. Like I said, rising tides are like retail phenomena. Like, that's when we have an all-time high break and you get that new retail we hope we get, right? Where everything is lifted, you know. I log on to Coinbase for the first time. Celestia is a really bullish project and it's $15. I'm buying it, you know. But it is suffering right now because everyone else has attention. I ended up getting long token because DWF, the sketchy market making crew, they're known to leave charts much higher before much lower, and they recently, it was I shared that they picked up 10 million worth of Floki. That was a week before the big markup, and they've done the same just today with token. So I think that's had a reflexive impact on the price of these assets because of how people respond to knowing what they do. So I took a position in token. I think I think Celestia is in similar bucket, because I see someone asked about it, as Sue and Say. So meaning these were really strong for a long time, but now are just suffering because the market has attention elsewhere. But Sue, for example, had a 40% pullback off of the high, and now is in an area where I think it's reasonable to bid. Like, you can see the level on my chart. I think it's a pretty clearly defined level. You lost the 20 period on the daily. Haven't touched it on the weekly, but I think the trend is like really strong for a long time. You expect some consolidation, but if you're going to have a pullback in an area, if you're going to get involved anywhere, I think it's back at the opening high, right? This sort of $1.25, $1 range is a good area to bid. I mean, we're above that now, but even if you look at the weekly right now, I think it's reasonable to say, like, buying this pullback, you know, will be good. Buying this pull, anyone who buys this pullback, I think, will be rewarded over the coming months. And I think that Say is kind of in similar place. You know, really strong and similar place in terms of like the market is just not as interested in these right now, but I think they will sort of get their second leg. And, you know, I'd say that the benefit of this is like you have a high, low, high, higher low possibly forming above this low, and you could define this position around this 60 level. Say, okay, you know, as long as that level holds, start getting long here. I mean, if we put on, we'll just do this for the sake of showing you guys from listing, so August 23, we'll throw a VWAP on that. Why is that not showing up? Oh, it's because it wasn't available on that day. So August, let's say 20th. Where's that VWAP? Does it not show on this resolution? We'll go down to the low instead. October. Very weird. Even if you did like a decade long, just to include the entirety of this chart, so a decade long VWAP, you'd see right now we're just retesting the 1 standard deviation band of that. So we got really stretched out, and this is a healthy pullback. So I think it's going to be, again, similar to Sue, a good buy. How much more can FET really have? I mean, look at prior bull markets. It doesn't need to make sense. There's no value that should surprise everybody. I mean, for example, just go to all the tokens. And then I'm going to wrap it up after this, guys. Look at some of the top 20 tokens, right, by market cap. We'll look at FET first. So FET is an AI project. FET's market cap is 2.3 billion. It's doing over $1 billion in trading volume a day on the spot market. And that puts us all the way down at, I mean, we're out of the top 50. We're 52. So ahead of you, you have things that are just garbage, you know, that are dead for the most part, that don't have a sexy narrative, and that are, you know, 20x that. So, all right, guys, I'm going to wrap it up. I appreciate you guys tuning in. We went for, it looks like we went for just over an hour. Thank you for being patient and tuning in for the very infrequent times that I actually do hop on here. If you guys are interested in anything that I use or anything that I went over, feel free to DM me, any of the platforms and stuff that you see me share. I'm more than happy to point you in that direction, whether it's like a flow platform or anything that you're looking at, right? Because I don't call out what I'm using as I'm doing it. I recognize that. Yeah, and that's it. Have a fantastic evening.